uh, I welcome you all in this webinar on SEBI LODR Beyond Compliance and the Path to Sustainable Growth on behalf of Taxmann as well as Adwin Advisory Private Limited, because I belong from Adwin Advisory Private Limited. See, why after a session of brainstorming we chose this topic, and I hope and I understand that those whosoever are attending today's session must be connected to SEBI LODR listed entities or other related regulations or compliances in one or other way. Because see, the past 1 year has been a roller coaster ride. Past more, I would say more than 1 year, approximately 2 years has been a roller coaster ride. SEBI is at the forefront of transforming all these regulations, and why these changes were required. The question has been popping up in almost at every corner of business discussion wherever we go, whether these changes are required, how the listed entities or the companies will be able to comply with these stringent changes, and what is we are going to benefit out of these change in norms, regulations, etc. See, the ultimate purpose or ultimate target of regulating a listed entity can be dissected into two parts. One, that if any company is getting listed, raising funds from public, it is important to keep a watch and eye on the same, and to make sure that it works in a seamless fashion, it works in a compliant way. There is regulations and checks are required. The other or the main objective why Security Exchange Board of India, which is the topmost regulator of capital markets, is doing all these things. See, basically the purpose of bringing out these regulations can be dissected or can be subcategorized into two parts for the purpose of investor protection, making sure that there is transparent investor communication and engagement of each and every stakeholder. See, it is the job of the company is not done if it is listed on the stock exchange or if it is listed on any other platform. India has two main board stock exchanges, NSE and BSE. Other than that, none of the stock exchanges are functional. Previously, they used to be in the time of 90s or maybe prior to that. But the job is not done once you are listed. The job is, I would say, the job begins once you are listed. So the main purpose of bringing out these changes, transforming these regulations, which might have been, in redundant stage since years, is bringing out transparency. That is the objective number one. Then the second objective is maintaining, ensuring the top level, or I would say the fairest level of corporate governance. And the third is asymmetry of information. I always say, see, since the time these changes have begun, probably 18 or 20 months back, I'm saying it constantly. See, every change which is coming out, you can very well go into detail by looking at the consultation paper preceding that change, then the background material preceding that consultation paper, because there is a structured format in which a notification or a change is brought out into any regulation. If there is any new regulation which is required to be uh, implemented upon, then there is a way. First there will be discussion within the regulator, then probably there will be a consultation paper which will be floated out for the public comments, and then there will be again in discussion with the industry experts, ISF, Industry Standard Forum, and in SEBI in between, and then comes out the final change. So whatever change is coming out, there may be a case that we all are not following continuously these changes. Because why I am able to comprehend all these things, because I have been fortunate enough to be member of the study group and the department which is looking after these consultation paper, replying on behalf of ICAI, as well as We had chances of interacting with SEBI, NAFRA, and other regulators also. We work with the exchanges. So every change which is brought out in any regulation, mark my words, in any regulation, it if any new regulation is introduced, we can't say or we should not assume that it is coming out in without any discussion. It is coming out without any rationale. Sometimes it might look to us, it might give us a feel that this is arbitrary, this has no rationale, this is not possible that somebody can comply with this. But every change is preceded by a consultation paper, probably, or not consultation paper, then a background material or a guidance note. And pre and post implementation discussions are also there. For example, if any one of you is working around the space of listed companies or SEBI LODR, I have a question, then I'll answer that question also. There were some changes which were introduced in 2020 and 2022 pertaining to related party disclosures, pertaining to related party transactions, in which at that time the regulator has categorized some changes to be made applicable, which is redundant now from 1st April 2022. And the second timeline was 1st April 2023, which is financial year 23-24, which we have just surpassed in terms of conducting of AGM, etc. So my question is, if any one of you who are attending this webinar are aware of what all changes were proposed, were brought into related disclosure related to related party transaction, you may write it in the chat box. Then we'll discuss this in detail in the in the end or in the mid of this session. But if you have any answer to this question, what all changes, whatever comes to your mind, if you are aware, you please share. So coming back to the topic, why these changes were introduced? What was the rationale behind bringing out these changes? So as I clarified, the rationale was transparency, governance, and asymmetry of information. We understand transparency, we understand probably corporate governance because it is the widely spoken topic amongst listed entities or other companies also. And third is asymmetry of information. Let me explain a little bit what is asymmetry of information. Asymmetry of information means if you take the literal interpretation or literal meaning of this word, it means that possession of information, the level of possession of information is different between two set of people. So probably if I am from the company side, if I am from the I am from probably I am related to the company, I am related to the promoter groups, or I'm related to any other key KMP of the company, I might be having, or it used to be the case that some of the information used to be kept with the company, they were not disseminated to the exchanges, and hence they were not communicated to the stakeholders, be it investors or otherwise. But in our case, see, this was not the only reason of bringing out these changes, but asymmetry of information is one of the three main causes by by which these all changes, amendments, regulations are driven. So I think we are clear why these changes were made, and they are made because if somebody belongs to the field, or if you have ever read SEBI LODR, if you are following listed entities, you will see a hell lot of consultation papers, notifications, circulars are being published. Almost, we are seeing almost every week we are receiving 2, 3, or more, probably more than that consultation paper to be commented upon. This is the level of change. This is the level of transformation which is going on. So I am again repeating my question to all of the participants, that if somebody is aware about what all changes, I'm not talking about the changes which were brought into in 2023-24. I'm talking about the changes which were brought in 2021, probably or 22, and they were made applicable from 1st April 2022 and 1st April 2023. It is an historical information, so I assume that we might be having some of us might be having this knowledge. So please write it in the chat box. See, these type of webinars are often termed to be monotonous ones, are often termed to be one-way communication. So let's not make it as a class or as a one-way communication. Let's make this as an interactive session. Reason why I'm telling you all these things, because if you are a chartered accountant, if you are a company secretary, with due respect, probably predominantly SEBI LODR or related advisory or consultation is treated as an uh, expertise area of compliance company secretaries, as well as mostly in advisory role, lawyers, law firms, or companies. In some cases, company secretaries are also working in this domain. But I would say for all our fellow professionals, be you are a chartered accountant or a company secretary, there is a huge scope in this field. And if you read the title of today's webinar, Beyond Compliance in the Path to Sustainable Growth. So the second question, which is connected to the first question, that what are the all changes which have been proposed in related party transaction, is related to sustainable growth. So what all changes have been brought into sustainability related reporting requirement? So my question is, if any one of us are aware of the same, what is ESG reporting, what is sustainability in your understanding, and how India is moving ahead in this field? These are the few of the question which I want to put on the dice, so that you can reply and we can make it as an interactive session. Because irony of the system is that if you talk about CA syllabus also, probably I say that in the finals there is a 4-mark question related to integrated reporting, and some of a little bit of standards on auditing related to sustainability is covered. Other than that, there is no comprehensive coverage to these topics. And mind my words, sustainability ESG is going to be the future. Gone the days when we used to give weightage to the financial section. Yes, being a financial expert, being a chartered accountant, or probably cost accountant or company secretary, we used to think that financials are the most important part of any annual report or most important part of any company's performance report of the year. But it is not the case. Financials, the importance of financial statements or importance of financial disclosures has been taken over by non-financials, and the future lies in sustainability, because one has to be sure that the business is growing in a sustainable manner, so that it is the bottom line can sustain. See, there is a purpose with which somebody starts in business or a company enters into the market. So the purpose is to make profit, but the purpose is to create value also, and value for all stakeholders. Stakeholders may be your employees, stakeholders may be your business partners, stakeholders may be your customers, stakeholders may be your investors, and stakeholders may be your the environment in which you are operating upon, and the government is also a stakeholder. So the value creation for all stakeholders is the main target, or is the main main objective with which everybody is conducting business. But it has to be a long-term sustainable value creation. You see, when we talk about mathematics, or when we talk about law of gravity, we see that if something is going up like this, it is bound to, at some stage of time, it is bound to go down like this also. So there has to be a sustainable growth, step by step growth. When we talk, where we say that there is no shortcut to success, but there is no shortcut to growth also. There is no shortcut to environment sustainability also. If we cannot make our business move in such a way that it creates long-term sustainable value for all stakeholders, we are not moving in the right direction. CA Sanjay ji has said market rumor verification, BRSR related party regulation 23. Sanjay ji, my question was, whatever you were saying, is relevant to the changes which were brought in 2023-24 via SEBI Second Amendment Act. The changes were made effective from 14th of June 2023. You can write this date, 14th of June 2023. Then the second phase of, or the second milestone of this change came in 2023 July, when BRSR core was introduced. Then some other small or big changes. Then an amendment came on 17th of May 2024. And recently on 30th September, in the recently concluded 207th board meeting of SEBI, they have passed, uh, some provision amendments, etc., which are yet to be notified in my understanding, but they'll be applicable from the date of notification itself. Some belongs to ease of doing business, like unified filing, like dissection of filing of various documents into summarized categories, or some are related to curtailing the ambiguity which was there in market related to say disclosure of litigation and disputes. We'll discuss all these things later on. Rajesh ji, if is there anyone else who is not able to see the presentation, the main page? If anyone else is also not able to see the presentation, because then I may stop and share it again. Please write it in the chat box. Okay. So it was visible previously also, Rajesh ji, but it was on the first page. So maybe because of that you thought that it is not visible. Ravi Prakash ji said deal value threshold. Yes, it is one of the changes which was uh, brought in into the related party transactions. Hemal, now I have moved on to the next slide. So we were discussing, my question again remains to be unanswered. My question was, there were some changes which was brought in 2021-22 pertaining to disclosure of related party transactions. If any one of us can answer this for me, I would be more than happy, because let's make it an interesting and interactive session. The second question which lies unanswered is related to ESG. What do you understand by ESG, and what is the reporting framework in India related to sustainability and ESG? If you have any other answer related to global frameworks, related to how in Indian context you understand ESG sustainability, you please put it in the chat box. So I would not take much time on this, particular introduction or background thing. Let me take you back to prior to the time of 2015. At that time, it used to be, listing agreement. Listing agreement is probably still in existence, but it used to be listing agreement. How it started, the whole idea of this, listing agreement of SEBI bringing out these listing obligation and disclosure requirements started in probably 1992, 1993, when 1992, probably when SEBI was established. And it started, it got incepted from Securities Contract Regulation Act 1956. Not relevant as of now, just telling you for the background purpose. Then came the listing agreement. Agreement is kind of a tripartite agreement, probably between the company which is going to get listed, the stock exchange, and a notional party to this. The two notional parties to this, one is stakeholders, and other is regulator. Then in 2015, because these regulations were scattered, they were here and there, there were different regulations, different type of clauses for different type of compliances to be made. SEBI consolidated, streamlined all the provisions related to the listed entities, be it related to compliance, be it related to annual filing, be it related to any sort of disclosure of financial information, any sort of fundraising, etc. Whatever it is, and LODR and ICDR regulations were streamlined in 2015. Since then, I'm not saying there were no changes, there were changes, but the major milestone came in 2023. Why I said in the beginning that it started 18 or 20 months back? because see, amendment regulation was notified in 2023 June. It was made effective from 2023 June, but the board decided in it on 29th of March 2023. And prior to that, there were some consultation paper which were floated in the public domain for comments and views. And prior to that, there was a background material. Why I am discussing again and again about this consultation paper or background material? Reason which, see, if you are new to the market, even if you are not new to the market, you are into this SEBI LODR regulation or related work or listed entities, there is a way to understand a regulation when it is implemented. First, you download that, or first you see or read that particular notification. Then find out when the consultation paper were floated and download that consultation paper, because probably what is there in the consultation paper may be or may not be, it will reflect in the notification, because consultation paper is just for the purpose of getting public views, getting the views of other stakeholders. And then there will be a background material. When you will download or read that consultation paper, certainly you will find the link to the background material or rationale by which these changes are crafted or articulated in that consultation paper. And then probably you will be able to understand. For example, you say that there were changes which were made in related party transaction in 2023. Okay, but we are unable to understand what is the rationale behind those changes. For example, one such change was, irrespective of the percentage of shareholding, every beneficial person was made and was included in the definition of related party. It may cause a problem in terms of practical compliance, but we cannot say that it is arbitrary. See, it is very easy to say that if your shareholding is 10% at any point of time during the year, the regulation is as such, at any point of time during the year, if your shareholding is 10% or more, and then in that case you are a related party, identified related party, you are eligible to be identified as a related party, and all relevant disclosures are required to be made. So probably if I am from the industry side, I would say that the compliance is difficult. I would say it is not possible that maybe if it is possible, it will consume a hell lot of my resources. But if I'm on the other side, I would say, ठीक है, रेगुलेशन ही तो चेंज ही किया, क्या फर्क पड़ता है? But mind my words, there is a rationale, there is a justification to each and every change which is brought out in any of the regulation. So if you want to read that, you need to go to rewind your cassette. You need to go to 2022 or 21, probably, when this notification was notified. Then you see preceding consultation paper, then you see the background material, and you will be able to understand why this particular change has been brought in. So as we discussed, 2023 June was the milestone one in this transformational change, which has started in 2022 November in SEBI LODR regulation. Then, as I told, SEBI LODR Master Circular was updated in July 23. It has recently been updated also again in November. Probably the date is 11th, or I'm not recollecting the date, but it has been updated in 2024 November only. Then the milestone came July 2023. July 2023 milestone was very important because the framework for assurance and ESG disclosure, that is BRSR core, was introduced. Then came another milestone. As I told, some amendments were notified in SEBI LODR and ICAI regulations for ease of doing business on 17th of May 2024. Then in June and May, we got some guidelines regarding guidelines for disclosure of material events, information, and rumor. Then we are on a constant journey. SEBI is issuing consultation paper quite often. As I said, we are receiving 2-3 consultation paper a week. Not all are relevant to what we deal in day in, day out. But once in a while, once in a week, you will get a notification, you will get a consultation paper which is relevant to broader aspect of capital market. So the major changes which were brought in, because I am navigating this particular session assuming that we want to get the basic knowledge of what happened in 2023, not jumping or switching to what is happening as of now, on what all consultation papers have been brought out, not directly discussing 2024. If you want a different approach, you may write in the chat box. So the major changes, which, as I told you, transparency, governance, and asymmetry of information was the main, three pillars on which, or three objectives with which these changes are made and are being made or are proposed also. Some of the changes: corporate governance, there were some changes; related party transactions, there were some changes; market rumors, it is still evolving. There were some changes post 2023 also, and it is still evolving. Main changes which were made was in regulation 30 related to disclosure of various material events and information. Then some sort of mandated disclosures, some sort of filling up of vacancies of directors, permanent or casual vacancies, then shareholder approvals. Many changes were brought in SEBI LODR in 2023. Plethora of changes were made in 2023's regulation. But the basic change or the major change was related to materiality. See, any regulation, any law, or any compliance is good when when the objectivity is when the subjectivity is removed out of it. So previously there were some events which were categorized, classified in Schedule A, or which were classified as in material events for the purpose of disclosure dissemination to the public or to the stakeholders. But there was no quantitative threshold, only qualitative threshold, or maybe the decision was at the discretion of board. And the thought process behind bringing out this change was that, see, subjectivity has to be removed, asymmetry of information has to be there, has to be removed. And with this purpose, there may be a case that I am a listed entity, and I wish that I don't want to pass on this information to the other stakeholders. I wish that I should keep this information with me. So I was allowed to do so, because in many of the cases it was at the discretion of the management. In many of the cases it was the language was as such that this loophole was there, that the companies were getting away without disclosing these things. So to curb all these things, materiality threshold was introduced, subjectivity was eliminated, and a quantitative threshold was introduced. It is called the rule of 2 to 5. The rule of 2 to 5 means if any the monetary value of any transaction or the indirect impact of any transaction crosses 2% of your turnover, then it qualifies as a material event to be disclosed with. If it crosses the 2% of your net worth, absolute in absolute value. So in case if it is negative, then it is to be excluded from the calculation, then it is to be considered as a material event. If the impact, direct or indirect, in monetary terms crosses 5% of the average absolute value of profit and loss, what it means that absolute value means be it profit or be it loss, it has to be clubbed and it has to be divided by 3 for calculating the average. But there is a very interesting thing attached to this. See, does it mean that I can compare, or I should compare any event with any of the quantitative threshold? Will it be justified if I do so? Will it be okay if I compare any event or any transaction which is going to have a material impact on my profit, but I'm comparing it with 2% threshold of my net worth? The answer is no. The answer is no. Why the answer is no? Let us understand, when you read, accounts, or the basic of accounting is that you should, or basic of any law is that you should compare two comparables. An apple can be compared with apple. The two information sitting at the same level can only be said to be comparable, and if compared will give the actual or correct result. So we'll come to this in the later part. The first stage of identifying material event is that you need to see if it is an deemed material event in schedule para A of part A of schedule 3, or it is there in the materiality policy of the company. Again, in para A part of the schedule 3, there are a list of certain transactions events which are already classified as deemed to be material events. So if it is so, then it is already out, it is required to be disclosed. If it is not so, then the discretionary part or then the subjectivity comes into play. Then you need to calculate the quantitative threshold as per the prescribed criteria. Then you need to determine the value or expected impact in terms of value. For example, if you are engaging into any transaction, there may be a case it has a monetary value attached to it, so you can very well or easily determine that what monetary impact it is going to have on the company. The other case might be that it is not having a direct impact. For example, a strike is being called out in your area and it is continuing for 2 months, it is continuing for 1.5 months, 3 months. You are not forcing any end to this. You are into a deadlock in that condition. But such a strike doesn't have any monetary value attached to it. For example, there is a black swan event in the market, like COVID came. There is no monetary value attached to direct monetary value attached, or you can assign a direct monetary value to this particular event. For example, a flood, comes in your the area in which the company is operating into, and it has no direct monetary value which can be assigned to it, but it has a larger impact in terms of value, indirect impact, which we need to calculate, we need to discuss, and we need to decide in between the company. This is the step number 3. Then if the value or expected impact in terms of value exceeds what the value that you calculated in step number 2, that is the quantitative threshold, it becomes an material event or transaction which is required to be disclosed with. But having said this, you need to compare two comparables. For example, if I am evaluating whether an event or transaction is a material event or transaction, and it has a direct impact on company's asset quality, it has direct impact on company's net worth, then in that case, you need to consider 2% of the net worth threshold. If that particular event transaction has a direct impact on company's profit, then in that case you need to consider 2% of 5% of the average absolute value of profit. If the particular transaction or event is going to have a larger impact or broader impact on the top line of the company, then you need to compare it with the 2% of turnover, because otherwise you will not be able to get a correct answer and define whether a event or transaction is correct to be categorized as a material event or transaction. If anyone has any questions till now, then you may ask. Otherwise, I'm continuing with the presentation. I'm again repeating my 2 questions. What were all the changes which were made in related party transaction related disclosures prior to 2023's amendment? And second is, what do you understand by ESG, sustainability, etc.? I expect at least few answers. I'm not expecting all people who are attending this webinar to answer, but at least few answers from you will make this session interactive. The second change which was made in LODR was related to identification and disclosure of continuing event, and this is very interesting also. See, what is a continuing event? In continuing event or information is something which was, if you talk about 2023, probably the first condition is that it is not disclosed in the past. Second condition is it became material pursuant to the change which was introduced in 2023, but it is not relevant now because it has become redundant. We are always trending into November 24. So if there is any information which is material based on the threshold, based on the regulation quantification criteria, and it has not been disclosed in the past, and it has a continuing effect on the company, and it is material also, then in that case at the end of or at the completion of each and every important milestone of that particular event or transaction, you need to disclose that particular information, designate particular information related to that event. One such example, why recently SEBI has introduced a materiality threshold related to tax disputes also. That tax disputes or litigations are required to be disclosed on materiality basis, on significance basis. And I have been saying this thing from June 2023. See, the concept, the idea, or the very purpose of bringing out these changes is materiality, transformation, transparency, governance, and asymmetry of information. But sooner or later, materiality was taken over by triviality. And if you go to the BSC's website, NSC's website, and you search in corporate announcement, you give a filter of regulation 30 or otherwise, you will see a lot of notifications coming out or uploaded under regulation 30, and most of them are related to tax disputes, friends. Most of them are related, most of them, I'm saying, most of them are related to minuscule amount of tax disputes. For example, a XYZ bank, which is the topmost bank of the country, has received a GST notice of 60,000 CGST and 60,000 SGST each. The topmost oil and gas producer of the country is receiving a notice of 10,000. The topmost manufacturing company of the country is receiving a notice of a lakh, 2 lakh, 10 lakh, 25 lakhs. Forget a crore also. Whether it is a material issue, the answer is clear no. It has no significance. The idea behind bringing out these changes were only that if there is any information which should have been designated to the stakeholders, which should have been communicated to the investors, it should go in that way. In no case, SEBI is willing to or has thought of bringing out this change with this, with this mindset. But this has happened, and now finally it has come to rest when SEBI has clarified that it has to be disclosed in the recently concluded board meeting. It has been concluded that it has to be disclosed based on the significance. Mr. Harish Kumar has said CSR, however, ESG is more comprehensive. Sustainability is something, maintenance of consistency in performance of at least not moving down. Harish and Raman, I'm sorry to say the answer is probably not correct to the extent, because CSR is altogether a different ball game, and sustainability is not maintaining the performance. Sustainability is related to harnessing, is related to taking care of your environmental, social, and governance related stakeholders, governance related, ESG related aspects, while creating value for your stakeholders. So profit should exist with a purpose. That is what the thought process with which these regulations or frameworks were introduced. India is the only country, probably, or one of the few countries which has an formalized sustainability reporting framework in form of BRSR. No other country has such a formalized way of reporting, such an formal way of reporting BRSR, ESG related disclosures or otherwise. So these are the few examples. These are the few example which depicts what type of disclosures were made. It is related to containing event related disclosure. This is made by one of the topmost public sector banks in this year only. Some sort of restrictions were imposed by the sectoral regulator RBI. This is related to most widely talked upon. I should not take the name, but this group is in discussion, or this group is in news today itself, and it has been in news since so many years. This is related to that and containing disclosure. This is also an example of an exhibition of how an containing disclosure will look like. All are in regulation 30. These are the deemed material events. I will not take much time. Sunil Shenoy, what is the threshold prescribed for disclosing tax matters as per the recent guidelines? Sunil, say there is no quantitative threshold has been, assigned to tax litigation and disputes. If there is any penalty, if there is any, any sort of uh, penal action, not if penalty is monetary, any sort of penal or otherwise any action is taken. If it is related to, if it is related to, if it is related to, you know, judicial bodies or sectoral regulator, then there is a threshold of rupee 1 lakh. Rupee 1 lakh is for sectoral regulators and 10 lakh rupees is for other regulators or entities. The second part of this particular discussion is that tax disputes or whether there is any quantitative threshold. So the word which has been used in the outcome published by the SEBI in of the board meeting is, the word used is significant or significance basis. So there is no quantitative threshold value of 1 lakh, 2 lakh, or 3 lakh rupees to which is added. But I assume in the light of quantitative threshold which has been introduced earlier, 2 to 5, probably if there is no if there is no such threshold specified, companies can go and compare any amount which is involved in a tax dispute or litigation to the quantitative threshold of 2 to 5, and may see if it is crosses the threshold, then it is to be disclosed. Otherwise, if it has no significance, it is not crossing the threshold, it is not required to be disclosed. So these are the deemed material events. They are they are given in the part A of paragraph A of Schedule 3. I will not discuss much about these because they are it is an historical information. Then the second major change was related to strengthening or tightening the timelines. Previously, it used to be that if there is an information which is occurred within the entity or which is occurred outside, then emanated from outside the entity, then there was a threshold of 24 hours as well as for the board meetings purpose, 30 minutes threshold was there. Now the regulation has been amended. Further, it has been amended recently. So 24, 12, and 30. So you can categorize if any information or if any event is emanating within the entity, then the timeline of disclosure is 24 hours. If it is emanating from outside the entity, give me a second. I'm Uh, Sorry for the technological intervention. I lost the connection in between. So there were changes related to timelines for disclosure of events and regulations. One was within 24 hours. I'm saying if the information is emanating within the entity, then the timeline is 24 hours. If it is emanating from outside the entity, then the timeline is 12 hours. And if there is any event information which is coming out of the board meeting, friends, then the timeline is 30 minutes. So these timelines is of 12 hours, 12 hours, 24 hours, or 30 minutes is without any sort of grace period, without any sort of grace hours. So let me make you understand how it works. If any information which is required to be disclosed and which is considered to be material for disclosure reaches to the person who is responsible for such disclosure, then in that case, from that particular time, the information reaches to that person, 24 hours will be counted. It doesn't matter whether you are standing or whether you're sitting on a holiday, whether it is past of your timings, whether it is past, your working hours. The time will start from that. If you receive that information at 9:30 in the morning, then the 24 hours will complete 9:30. Next day, if you receive the information at 7:30 in the evening or 6:30 in the evening, then the 12 hours or 24 hours will start from that particular time only. One specific change which I would like to bring into your knowledge was related to disclosure of events information coming out of meeting of board of directors. The disclosure is that if it is coming out of a board meeting which is happening after market hours, that is 4 p.m., then in that case this 30 minutes will become 3 hours. However, our personal view was that let us keep everything at the same level playing field should be maintained, because then it will motivate, or it will in some way promote the culture of having board meetings post market hours. But the regulator decided on the other side, and now it has been implemented also. If it is the board meeting is taking place after the market hour, that is 4 p.m., then 3 hours time will be allowed in place of 30 minutes. If there is any delay in case of disclosure, then there has to be a justified reason attached to this. These are some of the examples how a listed company, discloses such material events or transactions. Change in board of directors, change in ratings, share purchase agreement, S&P rating update. These are the various type of uh, examples of disclosures in practical level the companies have done. Now I'm skipping this particular timeline related regulation because I feel that it is not possible to cover each and every regulation. Come to the market rumor part. so so the regulation is that if there is any material price movement because of any information or event in a stock, and it is deemed to be an change material price movement. The definition of material price movement is also given in the guidance note or circular. Then you need to either confirm. The second part is either you confirm, deny, or clarify if there is any change, if there is any material price movement as specified by the stock exchanges. And then in that case, due to any event or information reported in the mainstream media which is considered as a market rumor, then in that case it has to be confirmed, denied, or clarified within 24 hours of such within 24 hours. There may be a reasonable call, but not later than 24 hours. But the word written is that impending specific event information. So somebody might ask, what is impending specific event and information? The answer to this is that impending specific event and information is that there has to be some basis, there has to be some rational, there has to be some ground to that particular information. For example, there is a rumor floating in the market. Market mean to say mainstream media even, that X Limited is going to buy Y Limited. I'm not taking any company's name. X Limited is going to buy Y Limited, and it is an it is an event which can have an larger impact on the price movement. It can cause the prices of share to have a material price movement as specified by stock exchanges. The term 5%, 10%, whatever changes are prescribed. But there is no basis to it. There is no discussion which is going on either in X limited or Y limited. In that case, it is not an impending specific event information. There may be a case that information is at a stage, it has not become an information eligible to be disseminated to the stakeholders. Maybe your board of directors have decided that let's think over an inorganic acquisition, think over an inorganic growth related option. But there is nothing, if there is nothing like this, not even at the basic stage, then it is not an impending specific information. It is not required to be clarified. Now, the problem previously, before clarification or before publishing of this document by industry standard forum, was related to what is mainstream media. It was also in question because we are living in a digital era. TV, news channels, newspapers are fine, but YouTube, LinkedIn, other social media channels, blogs, the world has gone global. So there is a uh, you know digital world which is running parallelly to what we are living physically. We all are so intrigued, we are so involved into our phones, our devices, online. All there is a separate online identity which everyone carries. So in that case, how do we tackle this? For example, somebody is running a YouTube channel. It has 5 or 6 million subscribers, and it has published that particular channel, or the particular person has published an information related to a company, and terming it to be in for example, I am running a YouTube channel, I'm running a cookery channel, mean to say I'm publishing videos or content related to cooking, etc. And I'm all of a sudden I publish an video or content that X A company is going to go bankrupt, or A is going to do or acquire such an technology, etc. Whether it will become an material information, the answer is no. Whether it will be qualified to be in mainstream media, the answer is no, because it has to be, again, the comparability concept should come into play. It has to be a case that where the rumor is floating, whether it is in social media handle, YouTube, other social media platform, it has to be, it has to be a case that it has a direct impact on the relevant audience also. Whether any sort of newspaper registered with RNI, still this thing is still awaiting in formal clarification from the regulator. But whether any newspaper registered with RNI will be termed as mainstream media, if you read this regulation, if you take out the literal interpretation, the answer is yes. But if you want to take out actual interpretation, in my opinion, the answer is no. There may be thousands of magazines, newspapers which are registered with RNI, which are not having a circulation of more than 200, 500,000 or 1,500 copies, friends. So in that case, whether it will be in mainstream media, be it newspaper or print or whatever it is, and it has a significant impact on the stakeholders, the answer is no. So it has to be seen in this way. Not all regulations say, if you read text, you talk about harmonious interpretation, if you talk about literal interpretation. So time has come that when we take literal interpretation of these regulations, regulator is bringing out these changes with that mindset only. So this is in snapshot or snippet of this is there on the website of SEBI, as well as you will find it in the exchanges also. What a material price movement will mean. It may be a case that if your price range is greater than 200, like in the case A, if the change is greater than or equal to 3%, so 3% probably has been kept as an basic threshold in all cases where the price of share is above 200. If the price of share of the scrip is between 100 and 200, then the change is kept at 4%. And if it is below 100, then the change is kept at 5%. So these are the basic, terminologies or basic, details of information which one require when you are interpreting a particular regulation. So if you want to, read, if you want to clarify, if you work in the compliance department of a listed entity and you will say that I don't understand how do I report a market rumor, how do I, make sure that a market rumor is required to be reported, then you need to see all these things, download this notification, download this particular consultation paper, background material, and then the industry standard forum note, because it is something which is important. Based on this, the material, all the material price movement prescribed by the exchanges, as I've shown the snippet. So these three, four things have to be seen in, seen together to make out any decision. One such change which was brought in last year only, if the listed entity confirms that the price movement is because of, a market rumor, within 24 hours, within 24 hours, then if the company is, articulating any such action of related to issuing shares, maybe OF, maybe OFS, or maybe FPO, or any other private placement, etc., or buyback, or maybe buyback in some cases. So if the company confirms that, for example, my price is the price of a script is at 350, 350 at 20 at the end of 21st November 2024, but yesterday it was 300, yesterday it was 250. But this sudden spike or sudden change is because of a market rumor which has been floated yesterday itself, and if the company confirms within 24 hours that this was the rumor, and because of this the price has been triggered and it has moved beyond any reasonable rational upwards, then in that case these 100 rupees will be excluded from the calculation. For example, hypothetically, if the company is doing a buyback. So these are the changes which were recently brought into the market. So let's move to the, I'm skipping all these things because otherwise we will lose out on the BRSR part, and I would like to cover the BRSR part. So this was the basic change which was brought into corporate governance reports. It was made mandatory if there is any cyber security related incident or loss of data or data breach related event has happened, then it is required to be reported in the quarterly corporate governance report. If there is any change in KMP, SMP, then it has to be reported in the annual corporate governance report, comparing into the what it was in the previous year. So these were the two changes which was brought into corporate governance report. Then reporting of fraud defaults. There are two changes which have been brought into place regarding to this. One is that if there is any fraud default by a listed entity or its promoter directors, KMPs, SMPs, etc., then this has to be reported within 24 hours of occurring of this particular, whatever particular incident has occurred. But the practical problem which the companies were facing, see, if it is related to a listed entity, then it is fine. If it is related to promoter, if it is related to a KMP, if it's related to a KMP of a subsidiary, then comes the challenge. Because if I am a KMP of a company and something happens with me, if I'm not giving the information to the company, then it is difficult and it is not possible for the company to report this information, designate this information to the exchanges. So what will happen in that case? The company will be treated as a defaulter, that it has not made or complied with the regulation. But this has been also taken care of because it was a practical challenge or difficulty which the companies were facing. Now it has been specifically the regulation has been specifically amended, and it has been included that if there is any such event happening, then it is the onus is on the person who has to give this information to the company, that within a reasonable time that person, maybe promoter, director, KMP, SMP, or whatever related to the company or its subsidiaries, provides an adequate, accurate, and timely information to the company, so that the company will be able to designate this information. So the onus has been rightly shifted to the responsible person. I'm coming straight to BRSR. So my question to all of you is, what do you understand by BRSR? If you are aware about what BRSR means, not the full form because it is there in the screen, business responsibility and sustainability report. Other than BRSR, BRSR's full form. What was the history of why it was introduced, when it was introduced, and what are the latest changes which have been brought into BRSR or sustainability reporting related framework in the current year or previous year. So I am expecting at least few answers so that I am also able to comprehend that yes, all of you are with me in this webinar. It is not a monotonous one. So when did it started? BRSR means Business Responsibility and Sustainability Reporting. It started in 2011. The whole thing started in 2011, and it started when when MC introduced national guidelines, national voluntary guidelines for responsible business conduct in 2011. Then, based on this, based on this, BRR was introduced. BRR was used to be business responsibility reporting. Then the milestone, the major change came in 2013 when there was a major change in Companies Act. And Companies Act was amended, and accordingly, new CSR provisions were brought into place, and they were comprehended or they were incorporated also in this particular BRR related reporting. Then 2017, the major change came when SEBI, issued a circular related to integrated reporting. I would request all of you to go and download that particular circular because it is very important to understand how integrated reporting has, evolved in India throughout these 7-8 years. When you read that circular, you will see that, you know, SEBI was also not thinking, or BRSR was not in the mind in 2017. The whole discussion or the introduction paragraph talks about BRR only. So probably SEBI thought at that time, probably I'm just making a guess that let's evolve from BRR to be integrated reporting, and it will be an alternative to what companies are doing, because BRR was predominantly considered or predominantly covering, or it was around CSR provisions only. Then in 2019, the BRR was extended to top 1,000 listed entities. But the main challenge or the main issue came in 2021 when BRSR was introduced. And here came the conflicting, or I would say the overlapping, disclosure requirements. One is voluntary adoption guidance, that is integrated reporting, but on the other hand, it has a global recognition. On the other hand, it is more comprehensive than BRR or BRSR. On the other hand, it gives the company more freedom to craft, to incorporate the content in a way, incorporate the information in a way that it serves the all purposes. It is much larger than ESG. But on the other side, BRSR is also comprehensive. It is, the framework has been designed in such a way that it takes out good of each and every global framework also, be it CDP, be it GRI, be it sustainability reporting, the ISAB's standards, or be it integrated reporting also. But one is voluntary adoption, other is mandatory compliance for top 1,000 listed entities. But why integrated reporting gained prominence in India or over the world also? Because it is a more comprehensive reporting framework. Then BRSR is only confined to ESG related parameters, whereas integrated reporting is much more than that. But then came 2023, and I would say we are fortunate to have a structured way, as I said in the beginning. India is one of the few countries which has a structured reporting framework for ESG parameters in form of BRSR. It is very comprehensive, but on the other side, it has some pros and cons attached to it. But it is applicable on top 1,000 listed entities. What is BRSR core? The question will pop up into your mind. BRSR core is a subset of 9 key ESG attributes. It is nothing but it is a subset of 9 important KPIs or ESG attributes, and reasonable assurance was required to be obtained by top 150 entities by market capitalization. In the previous year, now it is 250. But these BSR core KPIs are already integrated in the revised BRSR reporting framework, which is applicable to all top 1,000 listed entities. So one such welcoming change which was made related to market capitalization also, there are some regulations which are applicable on a company if it crosses a specific certain threshold in terms of market capitalization. But previously there was no such criteria for identification. Only the market capitalization of a company was seen at the end of and at the last day of the financial year, and if it at that day, fortunately or unfortunately, I would say fortunately only, it crosses the threshold of top 1,000 entities by market capitalization, it will fall into a different zone where it is required to comply with many other regulations. But on the other hand, there was no sunset clause. Now this has been changed. The regulations are revised. Now, the exchanges will publish a list by 31st of December 2000, whatever I would say, the 31st December of every financial year, a list of top 1,000 or the companies by market capitalization. And based on that, it will be decided whether a company is eligible or it should be you move to the tier in which it is required to comply with certain additional regulations. Then from the December 2020, so whatever, sorry, again, I'm taking financial to 23, 24 or 25. From December of that particular financial year to the end of financial year, that is March, you have clear 3 months to comply with the changes, because sometimes or often I would say it is not easy that if a regulation is made applicable on a company, and all of a sudden you will stand up and you will start complying with that particular thing, because it requires a hell lot of backworking also. So in that case, you have clear 3 months to change your systems, to make policies, to make strategies, and to make sure that in compliance which is applicable on your company from the next 1st April of the next financial year is complied with and is applied with in the rightest way. Again, the second welcoming change which was introduced was related to sunset clause. So sunset clause means that if once your company falls into this criteria of top 1,000 by market capitalization, top 500 by market capitalization, then this particular regulation or this particular compliance will be applicable in your company. But if your company is out of that particular threshold or particular bucket for continuous period of 3 years, then you will be taken out of that particular tier, and the burden of additional compliances or additional application of this regulations will be taken away. So these two were the welcoming change in terms of in terms of compliance with various regulations based on market capitalization. So again, I'm putting up a question to all of you. Please write it in the chat box. What is BRSR? We have got some answers, but not sufficient enough. What is BRSR? You understand by BRSR? As we have already comprehensively discussed, now you can answer at least based on what I've said. You're understanding that what is BRSR? It is one of the most comprehensive and one of the few structured reporting frameworks for ESG related information. But with responsibility comes challenges, and with rewards comes risk, and with any sort of new introduction comes hurdles in implementation, practical challenges which we see. See, BRSR is a comprehensive reporting framework which has an extensive data-oriented disclosures. 180 plus quantitative inputs are required when you prepare an BRSR report. There are some technical calculations which are related to be given, complex calculations which are required to be given related to GHG, that is greenhouse gases emission, related to waste, related to water, related to intensity ratios calculated at purchasing power parity. So complex calculations are there. Basically, predominantly the complex calculations are there in Principle 6 only related to water, waste, and energy, and related to GHG emissions. Then precise and prescriptive reporting format. So there is a case when it is in tabular format. It asks you an answer yes or no. It asks you an answer what is your policy, but you cannot write freely. So if there is a case that the answer is hanging between yes and no, in that case it is a problem for you, because either you will not be able to write yes and you will not be able to write no. So we have already discussed about July 2023 circular. We have already discussed about BRSR core, revised reporting framework, and the important change which is brought in BRSR core is related to value chain disclosure. Let me take you 5 minutes in discussing this value chain disclosure related thing. So first of all, what is value chain? Value chain is your is in layman's language. Value chain is buyer and suppliers. Value chain is buyers and suppliers. Value chain is your customers, your suppliers. So the downstream partners and upstream partners. So it can be upstream, it means that purchases, downstream means that sales. So value chain partner consists of your downstream value chain partners and upstream value chain partners related to your buyers and suppliers in layman language. What has been made applicable from last year, which it is still stands true, is that in 2024-25, while making your BRSR report, you are required to include ESG related disclosure of your 75% of downstream and upstream partners, and it is applicable on top 250 listed entities by market capitalization. Again, I'm saying top 75% of your value chain partners, consisting of 75% of your purchases and sales by value. So what does it mean? There may be a case in a company like Reliance, Vedanta, HUL, or maybe any of the PSU, maybe any sectoral top company, the number of value chain partners will run into maybe hundreds, maybe thousands. We were interacting with this company. We were interacting with a company last week, and they said, "Sir, what do I do, and how do I proceed when I have 300 or 400 value chain partners which are required to be, you know, which are required to be compiled with?" Somebody is saying that I have 1,500 value chain partners, and it may run into thousands in case of a company like Reliance. So as of now, this regulation stands true. There is no as such change, but in a few months back, there was a consultation paper which was introduced by the regulator for ease of doing business in BRSR and other compliances. And in that case, the regulator has suggested that let's cap an individual downstream or upstream partner at 2%. So if any upstream or downstream partner crosses that individual threshold of 2%, then only it will be eligible, or it qualifies for to be reported or to be included under value chain reporting framework. So meaning by which, if you divide 2 by, like, probably the intent is to keep the maximum number of value chain partners limited to 37. So it will remove subjectivity also, it will remove practical challenges also, but it is yet to be notified, and until unless it is notified, the regulation is as such that top 75% of the value chain partners are required to be included in ESG disclosure. So the challenge doesn't lies here. The challenge lies in how do I report for a value chain partner. When we discuss that there are more than 180 data points, things have been difficult for the companies, because the main challenges which we have seen as a person who is practically working in preparing these reports is collection, correlation of data, integrity of the data, and how do we fetch these particular qualitative as well as quantitative information also within the company from various departments is one of the major challenges. So when I'm finding it difficult for myself as a company, how I will be able to justify, how I will be able to implement the same on a value chain partner. Practical problem number one. Practical problem number two is that I am your value chain partner. So for example, I'm a listed entity and Taxmann is my value chain partner. In that case, what will happen? Taxman will say see, I might be an qualified, or I might be an identifiable value chain partner for you, but it might not be the case for Taxman. For me, probably, or in a hypothetical situation, it crosses the 2% threshold, even if you take the 2% threshold. But for Taxman, it might not be the case that Kuldeep Kothari or Adwin is crossing the 2% threshold. So what will happen in that case? They will say, why would I, you know, comply with your ESG related requirement? Other practical issues are also there, but this is how it is, and if it is there, we need to comply with the same. So we need to strategize this value chain reporting thing in within our company. So first, an assessment is required to be carried out. Value chain assessment is required to be carried out, wherein maybe giving Google Forms, giving access to a particular login ID or particular portal to your value chain partners may not be sufficient. You will require a lot of human intervention. You will require a lot of human interaction in making sure, in following up with the value chain partners, that if you have shared a Google form and ask them to fill in the information, probably will get 5% or 10% of the replies, but you need more of human efforts from the persons within your company or from any external consultant, that you sensitize you go and sensitize my value chain partners around this. Around the year, you need to run these programs, you make these policies, you need to disseminate, communicate with them, so that you are getting the maximum information out of that. And then when you are at a stage that you have made a system in which information is being gathered, it is being verified, the value chain partners are being followed, they are being sensitized, they are being made informed about various changes about the ethical conduct, business conduct of the company, then the reporting thing will come, and it will be seen at the end of current financial year if the present regulation stands true or continues till 31st March 2025 or before the reporting period. Then we don't have any other option that it is not the case, we don't do the reporting. So we cannot keep in mind that 2% change will come. If something has to be done at your end, at the company's end, it has to start. I'm saying we are late as a company. If the company is not started yet, in not thought about this particular thing, and if your company is falling within top 250 companies by market capitalization, then you are late. So you need to start and you need to strategize your planning about making value chain reporting an easy as well as compliant task. So since we are running short of time, we are standing at 6:26. I would take 2 minutes or 1 minute on telling in brief what all BRSR is about. BRSR is divided into three parts: Section A, Section B, and Section C. Section A is about journal disclosures. It contains the journal information of the company. Section B is about management and process disclosures. It contains the information related to the policy, NGBRC, 9 pointers, NGBRC principles related information, whether you are policy related to direct, whether you are reviewing the policies. And Section C is principle wise performance, in which I would say principle 6 is something which is related to water, waste, and energy. It is something which is more complex and which is more important in terms of taking care of. Then with this, though it is not complete, but since we are running short of time and we are standing 6:27, we need to stay. We need to put this particular discussion to rest. Maybe in some other webinar, if we can connect, we'll certainly share more knowledge. Two important consultation papers which are floated. One is very important. See, we are seeing IPO frenzy. We are seeing frenzy in the primary capital markets in past 1.5 years. It has slowed down since the markets have moved into moved into sort of bearish direction. But there was IPO frenzy. There is IPO frenzy. We all know, we have seen, we saw it in the news also, that a small company from Delhi who is running an motorbike showroom has received bids worth of 5,000 crores for a issue of 12 crores rupees only. So there are some changes which have been proposed in that consultation related to SME IPO. One is that the limit of the minimum application size is proposed to be increased to 2 lakh rupees. Then the minimum issue size is proposed to be increased to 10 crore rupees. The minimum number of allottees is proposed to be increased to 200 from 50. The maximum amount which we can offload as an OFS will be 20% only, subject to other uh, requirements. Then your issue size is more than 30 crores, 20 crores, sorry, then there will be a monitoring agency which will be, you know, which will be there. And it was very well needed also. There will not be any fundraising which is done for an unidentified purpose or for general corporate purposes, per se. If there is a repayment of loan or repayment of related parties, etc., then it will not be considered as an object for the purpose of issuance of shares. And if there is a change in promotership or there is a change in ownership of the company, then in that case, there will be a cooling period of 2 years, after which only you will be able to go public. So there are a lot of, changes which are there, a lot of regulations which are coming up, consultations paper which are coming up. Why I think Taxman and we chose to discuss or to, deliberate upon this topic, because it is something which has a future for all professionals, as well as it is something which is very important for the companies also. So from professional side and as well as company side, this topic is very important. I know that we have paucity of time and time restrictions are there. So we are not able to discuss all regulations, because if you want to discuss all regulations in detail, it will require you at least 3 to 4 hours. But uh, I believe that I have tried to cover most of them. So if you wish to connect with me, you can connect through Taxman as well as you connect on my LinkedIn handle, and my email ID is kuldeep@adwinadvisory.com. With these words, I will put my voice to the rest. If you have any specific question, anyone has any specific question, you may ask. Otherwise, we will sign off.